For financial statements, the first step is to label all the accounts into their respective categories. For the first adjustment, 130 of interest income has been received in advance. So we received the money but have not earned the income yet. So we're going to minus 130 from our interest income. And at the same time, we're going to create interest income received in advance. So this income, we have to fulfill this service in the future. So it is a current liability. Next, for rental expense owing, it means that we have not yet paid, but we have incurred the expense. So we're going to add 2,000 to the rental expense and also create a new account called rental expense payable of 2,000. This is a liability. The next one is salary prepaid of 5,800. So we pay already, but we have not incurred the expense yet. So we're going to minus 5,800 from our salary and create a salary expense of prepaid salary expense of 5,008. This is a current asset. Okay, the next two adjustments are depreciation. First one is using straight line. They gave us 10 years. They didn't give us the percentage. So you must know the formula for cost minus scrap value, which is 0 here. So cost 12,000 minus 0 divided by 10. This will give you your depreciation expense. And then take this amount and add it into your accumulated depreciation. We do the same for office equipment, but this time around using a different formula, 20% times net book value. So calculate the net book value first, 9,000 minus 1,008. And then we take the 20% of it to get the depreciation expense for office equipment. And then we accumulate this amount into the accumulated depreciation. The last adjustment is drawings not recorded yet. So minus $100 from our cash in hand and then add it to his drawings account. The first step is to label all the accounts. So put them into revenue, income, expense, NCA, CA, CL, and equity. After doing so, let's adjust. So consultancy fee revenue was received in advance. So that means we have received the money but not yet earned. So minus 1,700 from the revenue. And then create a new account called consultancy fee revenue received in advance. So this is a liability, current liability. Okay, next one we have general expense owing of 650. So this was expense that was incurred but not yet paid. So we're going to add 650 into the general expense and create the general expense payable of 650. This is a current liability. Next, prepaid rent expense. That means we pay already but have not incurred. So take 2004 and subtract it from our rent expense. And we create a prepaid rent expense which is classified as current asset. The next two we are going to depreciate. First one using straight line method, 20% times cost, which is $25,000 times 20%. This will give us our depreciation of fixture and fittings, which is an expense. And then we take this amount and add it into our accumulated depreciation. We do the same for motor vehicles, just that we use a different formula, 10% times net book value. So the net book value is taken to be 90,000 minus 17,100. Then you take 10% of it. That will be your depreciation expense of motor vehicle. Take this amount and add it into your accumulated depreciation. For the last adjustment, we have to first calculate the allowance that we need. So take 5% times 37,600. This will give us 1,880. And be very careful here because we already found an allowance account in the trial balance. Inside there have 1230. So that means we only need to top up another 650, which is the difference, to get the amount that we wanted, which we calculated just now. So 650 is your expense, impairment loss on trade receivable, and your allowance will be the one that you calculated just now, 5% of 37,600. So for this question, the first thing to do is to label all the income, expense, non-current asset, non-current liability, as well as equity. So after labeling the accounts, we can now adjust. So cleaning supplies expense was paid in advance. So this represents a prepaid expense. You pay first, but you haven't incurred. So minus 400 from the cleaning supplies expense, and then create a new account called prepaid cleaning supplies expense, which is a current asset. Okay, similarly, our service fee revenue was received in advance, so we haven't earned it yet. So minus 3470 from our revenues, service fee revenue, and then create a new account called service fee revenue received in advance, which is a current liability. Next, we are going to depreciate 10% using the reducing balance method. So the cleaning equipment net book value is actually 25400 minus 2540 to get the net book value. Then you times 10% to give you the depreciation expense. Take this amount and add it into the accumulated depreciation. For office equipment, you'll notice that there's no accumulated depreciation in the question. That means it's brand new. We want to depreciate using the straight line method. It has a scrap value of 300 and useful for 5 years. So use the formula 4000 minus 300 divide by 5. That will be the depreciation expense of office equipment. And then you have to go and create an accumulated depreciation of office equipment since it's not found in the question, and you put the same amount. Okay, last but not least, we are going to calculate the allowance for impairment of trade receivables. This is taken to be 8% multiplied to the trade receivable of 8,600. This will give us 688. So then the next step is to check, is there any allowance in the existing trial balance? We found it is 310. That means we only need to top up the difference, 378. So this difference is actually your impairment loss on trade receivable, which we will call it an expense. And your allowance will now be adjusted to the amount that we first calculated, 8% of 8,600.